following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block. With your hosts, Mark Longo from theoptionsinsider.com, Mark Sebastian from optionpit.com, Mike Tusaw from KnowYourOptionsInc.com, and John Grigas from Options Express.
Welcome back to the Option Block, and I hope all of our listeners had a good weekend. We were, of course, off yesterday for the Martin Luther King Day holiday, so we were recording one day late, but it's actually good timing for us and for you, the listeners, because there's a lot of stuff going on right now during the time that we are recording. I am Mark Longo. I am from theoptionsinsider.com, and I will be your host on this strange misadventure that we call the Option Block. And listeners, you may have noticed that I sound like death warmed over today, so I'm going to not be as vociferous as I usually am on the show. It's going to be all Mike Tusaw today, actually. We're all going to sit back, and it's going to be the Uncle Mike Tusaw show for most of the show. Of course, I am joined by the usual gang of suspects, starting off with the man from the mountains himself, Uncle Mike Tusaw. Uncle Mike, how are you doing this fine Tuesday afternoon?
Doing well. Just ready to dive on in, as you put it, and hang out on Don't Anyone Sit Under the Apple Tree with Anyone Else But Me, coming down from Apple Mountain, all those analogies for today.
It's going to be a big Apple day. We'll just tease our listeners with that. And then sitting next to him in our rotating round table here, we have Mark Sebastian from theoptionpit.com. You can tell I have a cold. I'm under the weather a bit because I didn't throw any adjectives in there at all into your name.
Yeah, no kidding.
You're just straight up Mark Sebastian. Yeah, I'm not firing on all cylinders today. So, Mr. Sebastian, how was your weekend? What's going on with you?
You know, it was pretty good, but we had my kid's first birthday party. It was a duck party, and
a duck party?
Yeah, it was ducking awesome.
Did you invite some dress up duck to come in? Is he a big fan of ducks or something?
You know, he loves that Rubber Duck song from Sesame Street. So we kind of, he's 1 year old, so we plastered yellow feathers all over the house, and and had a ducking good time. It was really fun.
I found the first birthday party to be anticlimactic because you can't really do much at one.
Well, he didn't enjoy it. My wife and her friends did.
Yeah,
true. They had a few too many and ended up a little ducked up, if you know what I mean.
Lots of liquor at the first birthday party.
Oh yeah, no kidding.
And ducks.
Yeah, it really did.
And our rotating third chair, the Options Express chair, is filled today by Big Rob Kurzakowski. Rob, how are you doing today?
I'm doing good. How are you, Mark? Well, other than being sick.
I'm doing good. We missed your dulcet tones here on the show. It's been a while, I think, since you've been on, Rob.
Yeah, I think it's been a couple weeks since I've been on.
You bring that nice, steady baritone, that kind of even keel, unflappable tone to the show. It's a good contrast to Sebastian's very uproarious, tinny tone. It's good.
Uproarious. I like that.
All right.
For being ill may affect your ability to speak. It doesn't affect your verbiage, though. I
can throw verbs down with the best of them, even when I am sick. All right. And with that, we will roll right into the trading/Apple block.
The trading block.
And welcome to the trading block. This is the section of the show where we discuss what we've been watching during today's trading session and what's kind of caught our eye and it's pretty easy to guess what caught everyone's eye today. Actually, the first news broke beginning of last week, or end of last week, after we taped the other show. I taped our last show last week about Apple and Steve Jobs taking another hiatus. And then, of course, today is Apple's earnings. So it was just a double whammy of Apple news today for Apple traders. And as you might expect, the stock, volume-wise, was just putting up incredible numbers today. They did over almost 1.1 million contracts in Apple today.
Wow.
That's just a ridiculous number. And this is, I mean, obviously they do hefty volume anyway. They do about 250,000 contracts on a given day, but over a million, almost 1.1 million contracts is just a beast. And obviously the markets were closed on Monday, so it actually probably helped them a little bit because investors had a little bit more time to digest that news of Jobs stepping down. It's funny, after we did the show last week, I was doing something else on the site on Friday, and I was thinking to myself, I was like, what can really derail this Apple train at this point? The thing is just off to the races with nothing to stop it. And the one thing I kept coming back to was, what if Jobs has another health scare? And I was like, well, what are the odds of that? He seemed like he came off pretty well at the last one. He seems like he's doing better. And literally a couple hours after I had that conversation with myself, he announced that big, stunning news. So first off, what do you guys think about what you saw today? And then were you trading Apple? Mike, we'll start with you because you are Mr. Verticals in Apple these days.
Well, it's funny how, like you mentioned, like the Steve Jobs thing. One thing that I always tell clients when I'm explaining a trade or a hedge or something like that in Apple, I always use the analogy. I say, okay, now let's say it goes down. Let's say Steve Jobs has something happen to him. This is what could happen to your spread. This is what could happen to your put. This is what could, and that's always what I say, just as kind of just out of habit, as an explanation point for explaining what could possibly go wrong with Apple. And then today, something does actually happen. So it's kind of funny how that works.
Yeah, I guess if you're trading Apple, you have to have those Jobs puts in your back pocket at all times.
Yeah, and it's what we did today. We have all sorts of different stuff going on in Apple. In the collar world, but primarily one of the trades that we've been talking about that we did recently was we got into the 320-330 January bull call spread, and
not the bull call spread, the bull call spread.
No,
that shows you how well it was doing. When you can always tell Mike's made a winner on a trade because his voice raises into the end of the sentence. When it's a loser, his voice drops. It's real interesting.
Man, I got you fooled so good. I love it. Anyway, with the bull call spread, we then got on another bull call spread. But what we did, we had the 320-330 bull call spread, and we got out of it today, actually. We got into it in the mid-4s, and then we got out of it in the low 8s today once it came up a little bit. And the way with which we played it was that we wanted to wait until we knew about everything that was going on with Steve Jobs in the pre-market. So the market was trading in the low 330s in pre-market, and basically the mentality that I had was, okay, it's very likely that we're still going to be profitable if we get out right now, so I want to do everything that I can to wait until the end of the first hour, just because I don't want to necessarily just get out because of the paranoia of the first hour of this announcement and that type of thing. So we waited, and finger was on the trigger the whole time. And we did dip below in the 320s for a little bit, but we did come back very quickly, thankfully. And with that being said, the spread for the most part was – I was watching the stock more than the spread, but we still weren't at the point to where we wanted to get out of it. So thankfully it came back, and this was kind of a hope trade for a little bit this morning. And the reason that I can justify hope trades are the fact that we use such a small amount of capital on the trade. And normally I tell people hope rhymes with dope, but – the fact that we have such a small amount of capital in the trade allows me to justify staying in when situations like this occur. So market came up, and we got out probably about a half hour before the close at the 820 level, and then a lot of people still had an itching to play this Apple earnings announcement. So the way with which we're doing it, for the most part, this is pretty much all the house's money on the table, but we got into the 340-350 bull call spread. Wait, how do I say it if I think it's going to be a winner? Bull call spread.
Bull call spread. Yeah.
So what we did was most of the money that we have into this call spread on Apple right now, I'd say it's probably about 70 to 80% profits from the 320, 330 call spread. So this way, clients, if they want, they can, and some people are in it, some people are not. It's just kind of one to where we left it up to the clients in a lot of cases on this one. We're at a stage to where if Apple does continue to rise, if it's a great earnings announcement, or if it's the market believes it's a great announcement, I should say, and Apple goes to 355, they're still going to be able to participate to the upside, but then if Apple tanks or even stays the same and volatility just drops and kills this spread, then it's mostly profits that we put back into it. This is an example of the importance of risk management in anything that you do, even when you're on the speculative side of it, which is something that we don't delve into too often, but when we do, we still like to try to pick our spots as best we can.
And Sebastian, what were you watching out there in Apple today?
You know, you were looking this morning, and you could just smell people wanting to buy this thing. I mean, it was – I looked, and I'm on record, and I'm going, that thing is going to get bid up. And I said I wouldn't be surprised if this thing's trading 340 by day's end. And, of course, it did. And, you know, there's just so much Apple Kool-Aid that, you know, it's actually not surprising. And as long as Steve Jobs is still considered there and a presence, I think that, you know, people are going to continue to love this company until they get one-upped by somebody. You know, does that happen with a big flood of tablet computers, tablet PCs heading to the market? Does that happen when the iPhone becomes more of a commodity than kind of a unique piece of equipment? You know, who knows? Basically, until Apple pulls a Sony, there's no reason for it to kind of really sell off at all. As far as the earnings today, the way it was looking to me as a setup was, you know, your classic kind of dud earnings. You know, it could move. I had a weird sense that it might not do very much after the bell. My thoughts were plus or minus $5 from 340 opening tomorrow.
It's like it's hovering around 342 in the after hours right now.
Yeah.
It's up about $1.35.
Yeah, I'll be real interested to see. We may get a pop. I mean, we will get a pop one way or the other.
Any excitement that these earnings numbers generate, they'll have to be tempered by the fact that you know, if any company is inextricably linked to its CEO, it's Apple
the Options
right now.
Insider.
Well, that, of course,
Apple.
too. Stories of Jobs being a megalomaniac are legendary. And and this is, you know, you hear a lot about, oh, well, this CEO is important, this CEO is important, and this CEO can do this for this company. But this is a company where the closest analogy to how it's run is really North Korea. It's a one-man totalitarian state, and he really does dictate almost everything that goes on there. He even, I mean, the joke is, but it's true, that he even approves the style and look of the T-shirts that they sell in the Mac stores. I mean, it's that level of micromanagement. So, I mean, just about everything they've done at that firm over the past 5 or 10 years can be directly attributable to him. And now you get rid of, let's say, I mean, his health problems last time, they downplayed them, but he was on death's door. He had to have a liver transplant, for God's sake.
Yeah, it was real serious.
I personally tend to think that a lot of this buying today came because today was earnings day. If it wasn't earnings day, people might have been a little more restrained in having to chomp and dive back into the stock so aggressively. What do you guys think?
I think that the timing of the news is great. A 3-day weekend, you kind of let the overseas markets, you know, pummel the stock, and you know, in the morning you have some of the smaller specs selling early in the day, and you know, after you get that first bit of selling out of the way in the morning, now everybody gets to refocus and kind of step back and you know, to get ready for the earnings announcement. You know, they also repeatedly stress that, you know, pretty much everything that's going to happen in 2011 is already planned out, and there's a roadmap for everything. So that I think a lot of traders found reassuring as well.
How low did it end up getting on the overseas? Didn't it get down like 15 or 18% at one point in some of the overseas markets?
It was, I think in Frankfurt it was down 16%. I was looking at the tape yesterday, and yeah, it was, you know, they let the overseas guys run it down, and so a lot of the the shock and awe already happened overseas, and I think a lot of U.S. traders were kind of caught off guard. I think you have that 3-day weekend, nobody really thinks about the market, and then we didn't get a lot of calls prior to the open, which is kind of surprising because normally anything Apple related that happens over the weekend or pre-market, it gets, we start getting a flood of phone calls. So either traders are, had some time to think it over and let the overseas markets do the panicking, or a lot of people were just kind of caught off guard this morning, because we did see some good selling pressure very early on. The spreads were a lot wider than usual, but yeah, I think that Mark kind of hit it on the head. Is there's so many people drinking the Apple Kool-Aid that you knew it was eventually going to get bid up. I also kind of expected a lot of people to start selling some premium. After seeing what the vols were doing, Apple's vols always spike going into earnings to begin with, and throw in this news item. So we did actually see some premium sellers started coming in midday, saying for some of the 5-point condors, they're collecting $1.85, and they're $20 away on both sides. That's not a bad deal.
Not at all.
So you had OX customers coming in and actually selling Apple Premium for a change. Wow.
Yeah, because normally it's the long spreaders, and actually, if you had an opinion going into earnings, today was a great day to put on a bull call spread or a bear call, or I'm sorry, a bear put spread, because of that premium. Because you're not going to just simply be buying all that premium. But a lot of traders make the mistake whenever Apple or RIM or one of the big name tech companies comes out with earnings, they start just buying calls and buying way out of the money calls instead of letting the spread do some of the work. I think last earnings announcement for RIM, the second strike out of the money calls really didn't do a whole lot, even though the stock moved up quite a bit. But if you did the bull call spread on it, you picked up quite a bit of decay the next day on that short leg, and what would have wound up being either a losing trade or basically just scratching wound up being a profitable trade just because you collect that premium on the short end.
Yeah, I'm looking at the overall numbers for Apple right now on today. And, with so many contracts, over 1 million contracts, it's hard to pull out any sort of activity general trends. But you mentioned the out-of-the-money stuff, and it looks like there actually was a decent, relatively healthy split down the middle in terms of where people were leaning. We saw about 35% of the calls they were selling were greater than 5% out of the money. And at the same time, people were about 34% of the calls they bought were about greater than 5% out of the money as well. So a pretty even split there. Same thing for the puts. The puts were about 41% were selling on the bid greater than 5% out of the money. At the same time, people were about 41% exactly again were lifting the offers on greater than 5% out of the money puts. And we saw about net deltas, about 1 million deltas long on the day, which is pretty much nothing, pretty much flat for so much volume. And the same thing with, and the average daily volume was about 1.1 million contracts. So surprisingly two-sided paper, given a day like today. You think the predominance of opinion would be in one side or the other. Yeah, put-call ratio about 1.6 to 1. So yeah, not a overwhelming majority of people hitting puts or lifting offers on calls or anything like that. It was pretty heavily split down the middle, and it looks like they just kind of came off a little bit again. They were just trading 341 again, so they're off a buck from where they were trading 342. But now they're
and there weren't any huge block trades that went up in this thing either. There were only a couple of trades that I could find that were over 1,000 contracts, which is again kind of surprising. It shows kind of no real conviction in the product. I dropped my size down to like 251, and it's still only 20 plus trades. But stuff that I saw was people selling way upside premium, which I know we all like selling cheap premium, and we saw. I'm looking at a lot of cheap premium sale early in the day, the 65s, the 70s, stuff that's kind of way out of the money. I didn't see a lot of huge trades go up. The big paper just kind of took a pass on the stock, it looks like. So no conviction from the big boys is what I would say.
Yeah, that's kind of the opinion I had. This parsing the volume numbers, the same thing. There was no size blocks, no big size trades, no massive spreads or anything going up that would show some sort of direction from institutional paper. Just a lot of 10 and 15 and 20 lots going up across the board on every strike you could imagine. And, of course, a few other things did happen today, of course, and probably the biggest of them was Citi disappointing the street today and getting clipped about 6.5%. To do it, they closed at $4.80, down 33 cents. And did you guys pay much attention at all to the Citi announcement, or were you too captivated by Apple?
I was actually in the captive Apple group today, I must confess.
Yeah, I mean, we always get a good amount of Citi and Bank of America paper flow going, from the retail side, and that was probably the only reason why it kind of drew my attention, is we did have a little bit more Citi and kind of Bank of America backing on it, paper coming through. It seems like the street has been spoiled by all these good bank earnings, that they really took it out on Citi for missing the street estimate. And I don't know if it's just the government kind of weaning some of these banks and letting the banks actually run themselves a little bit more, and that's what it would have affected it, or that their core business has gotten so conservative that maybe we're going to see really slow growth from the banks going forward. But yeah, that was the only thing pretty much I paid attention to outside of Apple today, because and even with Apple, it was the volume came in spurts. It wasn't really steady all day, and we didn't have the usual pre-market, oh my God, what's going on with Apple type of calls. So just overall, it was pretty uneventful day after the initial Apple shock.
And looking at the overall numbers for Citi, I mean, Apple did about 1.1 million, which is a huge number. Citi did 2.4. So, I mean, Citi's always a volume leader, and a day like today, they just put up ridiculous numbers. And 2.4.
Well,
and this is I know your stance on Citi volume.
Half of it's made up. That's the thing you have to remember, and just guys trying to steal payment. But I love when people look at a stock like Citi and they go, "Oh, it was off 6.5%," and you go 6.5%, and then you look and it's like 25 cents, and you're like, "Okay, big whoop." It was down 33 cents today, which, yeah, Citi needs to go through a reverse split. Yes, it affects market cap, but really, it's 30 cents. Okay, all that is from your average retail investor. Okay, save your major institutions that own billions of this stuff. It's kind of a little bit of more of a who cares. Although I would comment, if you look at the Apple 4.5 puts as a 12-cent sale, it's kind of interesting. So that actually might be kind of the March 4.5s you can sell at 12 cents. I don't think that's a bad trade, do you?
But yeah, we have been looking at that 4.5 level, and I thought Feb was a little bit too soon to get in, but we were kind of eyeing those March 4.5s too, and maybe using them to leg into some sort of a debit risk reversal. Even if you're bullish on the upside, still you can make it tight, do 4.5, 5, and pay like a nickel credit debit or something like that, or make it wider if you're not as bullish, or you want to go premium flat. And there's a lot of ways you can do that. And we still have, I think, overall net, I think we're still in our, stock replacement on Citi as kind of the way we've liked it. We put on a few months ago these long terms. I think they were the Jan 2013 2.5s, and just using those as some nice cheap stock replacements out here, and that seems to have been a good fit for us. And you mentioned the stock is down a bit, but the stock was trading a little over a month ago. It was trading $4. So this thing it needs to come off a little bit, and this is probably a healthy correction in Citigroup right now. Tusa, I know you said you were talking about Citi with some of your clients. You guys have anything going on out in Citi right now?
A little bit, nothing too significant. Basically, we have a couple people that have like some leaps on it, but nothing really that would account for more than 0.1% of any one portfolio. So nothing too big. I do think that financials are going to be a good spot to be, just because, as I've said before, if we recover, they're going to be the ones that are leading the way, I believe. So I think financials are definitely a good spot to be. The other one that we have just in Lewis City, I'm just more of an ETF guy, as you guys well know, KRE, XLF, and then maybe a little bit of City.
Yeah, we've joked in the past you like to lean broader. and
the broad man, the broad mountain man.
You love your broad ETFs. And so I think that's going to do it for the Apple block today. And we're going to close it out and roll right into the odd block.
The odd block.
And welcome to the odd block. This is the section of the show where we discuss some of the interesting activity that's lighting up the tape today. And quite frankly, there wasn't that much interesting to compete with Citi and Apple in terms of unusual activity. When you have Apple putting up 1 million contracts, Citi 2.5 million, it's kind of hard to find other activity that merits a lot of attention. But there were a few interesting little trades going up. We start off with Cypress Semiconductor Corp, CY. They closed at $21.15. Down 19 cents. This is a name that does an average daily volume of about 3,000 contracts. Today they did over 12,000. So a healthy bump in their volume. They set a new 52-week high last week of 21.71, and now it looks like a big block trader is coming in to bet that they're not going to go much higher. A trader came in today and sold 9,000 of the June 22 halves. Most of them in a big block of 8,500 contracts. Sold them for $1.50. So this guy's obviously betting that the immediate upside for CY is not much higher than where it is now. This guy, I mean, obviously there's a lot of axes he could have to grind. He could have stock and be writing covered calls against it and wanting to generate some income. If that's the case, he should be doing it a little bit closer than June probably. But or he could just be a guy who he thinks CY is going to be range bound for the next few months and not going to trend much higher than 22.5. And this looks like, this one is pretty much the big trade in CY. Any of you guys watch this one at all?
Don't watch it, but from what it sounds like you were saying, it made the 52-week high. And apparently it just sounds to me like the guy, whether he's a stockholder or whether he doesn't hold anything or just wants to have some exposure to it, apparently he likes the premium and thinks the party's over in one way, shape, or form.
Yeah, if he's not a stockholder and he's just putting on a short position like that, he's tying up a lot of capital to do it that way. You know, the margin requirements on something like that. I mean, Rob, you'd know that better than I would even. But that's going to tie up a significant amount of capital to put on that short position there, wouldn't you say?
Yeah, it will, especially if you're a Reg T margin. I mean, portfolio margin, not as much, but you know, when you load up on one side of the market, even portfolio margin, you get kind of punished on your requirements. It likes it. Portfolio margin is actually kind of like Spanish for futures. It likes you delta neutral and balance.
Because what would based on Reg T margin, the margin requirement would be probably about $5 or $6 on that per share. Am I correct in that assumption, Rob?
Yeah, exactly. And you're going to be holding that, for 5 months. That's a pretty significant amount of time to be holding on, unless you have another bullish strategy or something that you're pairing this against. That unless this is a covered position, unless the person does hold quite a bit of stock, and I'm guessing that they probably either have quite a bit of stock, or they're somehow hedged against this position, or this is kind of a shorter term play, which from the looks of it isn't really a shorter term play.
Yeah, because this is one to where it's not like day trading an E-mini contract where you can have the one tick stop loss in place. I really wouldn't see that going on something like this. So I agree, it probably is some type of a covered call, but theoretically you never know. It could be a naked call, I guess is what I'm saying.
Yeah, we see this a lot with people coming into options, and they learn about selling premium, and they get very excited, and then they see some contracts, and they hit them, and then they look at their accounts, and wait a minute, why is so much of my capital tied up? And they don't think about the opportunity cost that comes with a lot of these trades. And so something like this, where you're right, Rob, with the Reg T and the portfolio margin, there is a significant opportunity cost to this trade, especially putting it out in June. So I would have to imagine this guy is covered somewhere on this. Otherwise, he's just putting a lot there's probably better ways to do this without using as much capital than to do these upside calls in June.
Yeah, I found that one of the nice things about the weekly options for, Cypress happens not be a company that does the weekly options, but when you constantly kind of resell premium, you tend to pick up a little bit more on the way. So, going out to June is probably not the way to go if you're just trying to pick up premium, unless this is just somebody with a lot of money and not a lot of trading knowledge.
Yeah, large size does not automatically mean savvy trader.
Yeah.
We've learned that a number of times. This guy could be silly enough to be doing this trade for income out in June. And if that's the case, then maybe he deserves what he gets. And then moving on to eBay, and the ticker symbol for that one is pretty easy. All right, eBay, and they closed at $29.45, up 27 cents, or almost up 1% today. And what we saw on eBay is a continuation of some serious bearish sentiment coming out. People are picking up some size puts in eBay these days. And it started off today, well, it didn't start off, it kind of concluded today with a sizable bear coming in and picking up 15,000 of the July 26 puts for $1.32 each. And it seems to be a continuation of a trade we saw last week where another big trader came in and picked up 35,000 of the exact same contract for $1.58. So that puts a grand total of 50,000 of these July 26 puts going up over the past week. So these guys are obviously thinking that eBay not looking too good in the near term, and their earnings are coming up, I believe, on Wednesday. So these guys are not immediately positioning for earnings, but more for the longer-term trend of eBay heading back down from where it is right now. And I think overall, I don't trade eBay very actively, but I can kind of see where they're heading with that. This is a company that seemed kind of listless over the past few years. They didn't really know what business they were in, I think. I know a lot of people were touting Meg Whitman, the former eBay CEO, when she was running for governor, as this great executive, but she's the one who bought Skype for $1 billion at eBay, a deal which had absolutely no accretive value to their underlying business as an auction house whatsoever. And ever since then, they spun that deal off recently for pennies on the dollar, taking a huge hit on that. And ever since then, they haven't really seemed to really do much else to really move the needle in terms of interesting developments. Any of you guys active at all or watch eBay at all?
Not active in it, besides my wife being on it quite a bit. But
yeah, I like that Weird Al Yankovic song. I bought it on eBay. No?
So Tusa, is she the big breadwinner in the house then, selling all the stuff on eBay?
Oh, no, I wish she sells stuff on eBay from time to time, but she's more of a buyer.
Yeah, Mark, I was just telling these guys that there's been some size put buying out in eBay. 50,000 of the July 26 puts have gone up over the past week, in prices ranging from $1.32 to $1.58. So, and pretty much in two big blocks, 35,000 last week, 15,000 again today. So yeah, a lot of downside sentiment. Obviously, it could be a stockholder looking to hedge himself long term. That probably makes a lot of sense considering that he's buying out in July. He wants to use the time decay to his favor. He's not positioning for an immediate pullback ahead of earnings, which are this Wednesday. But yeah, some size downside activity in eBay.
Yep. I don't. I mean, they're a good company. I mean, but you're right. They are kind of listless. I don't think anybody knows exactly how they're going to get a lot bigger. I think there's been a huge backlash toward PayPal, which is a problem for them. I'll be real interested to see how this thing pulls out.
Another thing that I'd like to add to, like right now, the high of the day is touching the 50-day moving average. So that may have, it was approaching it, but right now the high is just touching the 50-day moving average. So that could also be a factor in this and the person that's looking at this.
Yeah, I think that it seems like lately eBay hasn't been able to do anything right as far as what people's perception is. Before it was maybe it's hard to see how their business can survive, with these low fees. Now people are concerned about their fees maybe being a little bit too high and pushing business toward toward other online auction places or marketplaces, and the Skype debacle. So yeah, there's kind of slow growth because now a lot of your big box retailers are now selling clearance items on their own sites, and you're not seeing these people kind of arbitraging, buying their own stuff cheaper and then reselling it on eBay quite as much. It's tougher to find things on eBay than it was maybe just a couple of years ago.
Yeah, there's many more competitors out there now. I mean, Amazon's doing it. It's just a much more complicated marketplace than it was a few years ago. And I know they're taking a lot of heat on PayPal, but at least the PayPal acquisition made sense. Right. In terms of their underlying business. It made a perfect amount of sense. You're a cash transaction company online. You should buy an online bank. It made perfect sense. But the Skype thing never made any sense to me. And that's pretty much going to do it for the old odd block. Maybe we can throw one little one in there. We love talking about RDN. And I'm just looking through our tape today. And these guys put up another almost 9,500 contracts went up today. Wow. RDN. 4,300 of the Jan 9s. Almost 4,000 of the Jan 10s. This thing is just printing volume these days. Like, this is a name that used to do an average daily volume of just a handful of contracts, and now it's really the average daily volume now is up to 4,500 contracts. So that'll tell you that what's been happening out there. It looks like the bulk of them were buyers of these Jan 9s and Jan 10s out in RDN. So yeah, those Jan 9s are probably going to go out around 70 some odd cents. So I guess that trader who bought them all back when knew what he was doing. All right, and that's going to do it for the old odd block. And with that, we will roll right into the express/spread block.
The Spread Block, brought to you by Options Express. Options Express lets you trade futures and now foreign futures too, where and when you want. From advanced charting and free daily trading ideas to automated systems trading and free educational resources, Options Express is the online broker for all traders. Visit optionsexpress.com to open your free account. Futures involve substantial risk and are not appropriate for all investors. Please read this disclosure statement for futures and options available at optionsexpress.com/futures risk or by calling 1-888-280-8020 prior to applying for an account. Options Express is a member of FINRA, SIPC, and NFA.
To the express/spread block. This is the section of the show where we sit back and we listen to our Options Express chair regale us with stories of wonder and merriment from Options Express land. So, Rob, what stories of wonder and merriment do you have in store for us today?
I kind of hit at it earlier with Apple and the fact that we did see quite a bit of premium selling later on in the day. I was kind of almost, waiting for it going into the earnings just because it always seems like a good idea to sell premium going into Apple earnings, and then they blow away the street, and then you wind up getting burned. But today with the news, I figured we'd probably see more feverish action, which we did. A lot of traders seem to actually take breathe a sigh of relief as far as Citigroup. You saw a lot of the covered call traders selling a lot of $5 calls and not really with the intention of getting the stock assigned. So I think that today's move either gives traders an opportunity to roll or just to hopefully let the options or their $5 calls for January expire at the end of the week instead of now having to pay up and actually pay to get out of your position where you're kind of defeating the whole purpose of writing covered calls. And that was pretty much it on the trading front. It was a very mixed day. Even commodities, it was a whole lot of nothing. We did have a nice pop in silver today, and I think that was just because the metal really got beat up over the last couple weeks. Gold futures. Really a whole lot of nothing because the European bank central bank news seemed like it was a it'd be something really good for gold traders. But we've seen a lot of the institutional papers institutional order flows start kind of diversifying, and they're buying. They'll actually go to Europe and they'll actually buy dollar or euro-based DTNs, which are basically ETFs in gold. So we've seen them kind of play this rotation in trading gold in different currencies. So even that was really quiet today. We do have we are kind of currently in the process of testing a new version of Extend, and I think for the average trader, especially those of us that don't have perfect eyesight, or it's certainly going to be a huge improvement over the last UI. The color or the text is a little bit sharper, and we're seeing we have a little bit different layout. The customizability of the platform itself is going to be a lot easier, and it's not going to be, again, as hard on the eyes. I think a lot of traders, it was a lot to take in with the platform. Just like our website, when you start offering a lot of tools, sometimes those tools are a little bit more difficult to find, so we try to make it a little bit easier to find everything on the trading platform. So you're seeing a lot of UI changes. Now, as far as the functionality and new order types, though those are going to come out with the new releases, I think the first thing that everybody from our tech department really wanted to see squared away was the user interface, especially a lot of our traders that are in front of the screen for hours. The old text was or the old font was a little bit rough on the eyes. So, I mean, that's all we really have going on right now.
That's good to hear that you guys have done some tweaks to the Extend UI, because I like it and I like to use it, but I agree, it could be burdensome to look at it for long periods of time. And it was a little bit cluttered. You really had to kind of work with it a bit to make it easier to use. So it's nice to hear that you guys have done some tweaks. I like that, because I do like using the Extend, and anything that makes it more user-friendly will definitely, I think, be welcome to our listeners. And I think with that, we're going to close out the old Express/spread block and roll right into Around the Block.
Around the Block.
And welcome to Around the Block. This is the section of the show where we discuss what's on the horizon for the next few sessions. And what's on the immediate horizon for right now is Apple's earnings. The conference call must be underway. The earnings are out. And because the stock just popped up to about 355 when it closed at 340.
352 now.
Yeah, now it's hovering around 352. So it closed at $340.65. It's trading about 352.70 right about now. So yeah, obviously some bullish sentiment coming out of these earnings. Never let it be said that Apple does not know how to massage a negative development at their company and not have it impact earnings. I think Rob hit it right on the head. They masterfully played that jobs announcement, putting it out ahead of the long weekend, give you 3 days to digest it, let all the sell-off happen overseas. By the time it got back today, they knew today would be an earnings day. People would be chomping at the bit to buy the stock anyway. And look at it, they've already erased all of that damage, and they're up to the plus side again. So it's coming off a little bit from the initial frenzy.
It's kind of doing what we thought it's going to do. I mean, just like the news this morning was a bit of an overreaction, I think that the news from this afternoon is a bit of an overreaction. You know, Mark, I don't know if you know this, but I forgot to mention that I bought 3,000 shares for about $335 near the bottom, and I just unloaded on the top at $355. So, I'm having myself a pretty nice trading day. So I was about to buy drinks, but since you're ill, I'll buy myself some drinks, and then I'll buy you a thing of NyQuil. So
there we go.
To make you feel a little better. So
now, if you were smart, you'd have shorted it when it got to 355. That's what a good trader would have done.
Oh, true. Oh boy, it is really backing off. 350 now.
Hey, who's the bastard who took down that 355 print?
That's nice. That's nice trading.
That's nice trading. And then, of course, Apple is not the only big fish on the horizon, though it is one of the biggest. We do have Goldman before the open tomorrow. So that'll be an interesting one as well to see how much front-running money they made this past quarter. And then, of course...
I was looking at that, and I'm not really expecting a lot out of them. Interestingly, the Goldman straddle only has about an extra $3 in it relative to where it was trading last month. So I'm kind of surprised. It doesn't seem like there's going to be a lot coming out of this one. If I had to bet, I'd bet a thud.
Yeah, it looks like Goldman went out about 175. The straddle went out about about 540. And so yeah, it doesn't look too rich. But
that might be one I would take a flyer on as opposed to the Apple one.
Yeah. So I would be terrified to sell that straddle in Goldman, but if I had to lean, I probably would lean long just because it's Goldman. Doesn't hurt to bet on Goldman, and you never know, they could make some crazy surprise to the downside again.
Right.
This is a name that is very, very exposed to regulatory minutia, and any single development could send them hurtling back down again. We also have, on the 20th, we have a pretty busy day. We have AMD, IBM, and Southwest all announcing on the 20th. So a lot of interesting names coming up for the rest of the week. That's what we're watching. What are you guys watching for the rest of the week?
I'm not even really looking out for AMD. I think we've got a slew of announcements coming out next week. The big thing is tomorrow, housing starts. Along with all the housing data, you'll recall Bill Luby talking about how that has actually been driving the market. And if you look, employment reports are kind of on the overrated side, and these housing start data have really been driving the market in all sorts of directions. So it's really kind of interesting. I think that could really move the market tomorrow, possibly more than Apple, which is now off. It's given away half of what it made back from made on that earnings pop.
Should have shorted it.
Yeah, it's trading 347 now, so the giddiness is subsiding somewhat. Tusa, what are you watching for the rest of the week?
Apple. No, I'm just kidding. Nothing in particular. It's expiration week right now, so we're looking to we're going to see how gold works out. We're kind of right at the 133 level right now with GLD, so we have put options at that level, so we're going to see how that plays out. We still are short puts on SLV at the 25 level, so we're probably going to be doing some rolling on some of those options the rest as the week goes by. But aside from that, we don't have anything in particular in terms of earnings announcements or things like that. We're just looking to try and make the roll from January to February as smooth as we can in the world of options.
Yeah, silver seems to be vacillating around that 28 level quite a bit lately. They got down to around the high 27s for a while there, but then now they're bouncing back up over 28 again. So those 25 puts are looking pretty good at yours.
I just wonder. I wish it would pull back. I want to get into it, but I don't want to get into it at this level. So we'll wait patiently and hopefully not get in at 21 when we're short the 25 puts.
Yeah, and your Cisco's looking pretty good, so you're not hurting on that sale so far. Rob, what are you guys watching over there at Options Express for the rest of the week? Obviously, it's expiration week, so a busy week for you guys.
Absolutely, and one of the indexes that's really close to a major figure is the S&P. It's kind of hovering below that 1300 level, and sometimes when you get close to a big figure like that, it's really easy to get pinned on position. So there's going to be a lot of probably choppiness and indecision later on this week, especially the SPX traders, the guys that have whose settlement is completely out of their hands. So we may see a little bit of uptick in activity in SPX options late in the day on Thursday if we're still kind of close to that 1300 level. As far as markets watching, gold briefly dipped below support last week, and it seems like whenever the market has like these M tops or kind of double tops that come into place, it's never it confirms the double top and then the market just absolutely collapses. And gold kind of did the same thing. It kind of looked a little bit toppy on the chart, at least the gold futures. And we had a little bit of a dead cat bounce and kind of a really sharp sell-off, last week. And we're closing in on the 100-day moving average, which is at 1345 today. I think that if that 100-day average goes, I think we potentially may see a lot more downside to gold. So, on the metal front, that's really what I'm looking at. A lot of the other commodities have really been tough to read. Oil was one that I thought for sure was going to break out of a range. I started actually looking at some callback spreads that you're actually getting paid for, picking up about a $400 premium, and that didn't work out as planned because I figured it was either going to go below 91 or go above the 94 level, and it didn't do either one of those two. So surprisingly quiet trading in commodities of late, other than the grains and occasionally when silver decides to move 50 cents in a day.
All right, well, that's going to do it for the Around the Block segment, and it's also going to do it for this episode of the Option Block. I want to thank all of our guests, or I should say, I want to thank all of our panelists for joining us today. And starting off with you, Mr. Tusa, what do you have going on over at KnowYourOptionsInc.com?
Well, a couple things that we have going on in the coming week. Sunday night, we have a webinar on hedging a stock. And Monday night, we have a webinar on neutralizing gamma. So we're excited about that. And, we're actually filled up on the one-on-one webinars right now for what we have the time to do based on what we had said last week. So we're not available with that anymore, but we will be sending an email out to our list. So if you are interested in being on our list for the general one-on-one webinar offer coming out in a couple of weeks, stop by our website. And with that in mind, thanks for all the patronage, everybody.
Oh, you guys got a good response on the custom webinar then? That's good.
Yeah, we got a few. So it's one where that's been a good thing for us in general.
Mark, I only have one thing on my list. It's your kiss.
How long have you been holding on to that gem?
As soon as he said our list, I started thinking of that awful song from the 80s. So, good stuff.
When is your mind not a cauldron of horrible 80s references and pop culture trivia?
When it's a cauldron for 70s horrible pop culture trivia and stuff. So, I'm going to be giving a presentation on Thursday for the Option Club on adjusting and managing butterflies. It is a precursor to a feature piece I wrote for Stocks, Futures, and Options magazine. So, it should be really interesting, and for information on that webinar, you can go to my website, optionpit.com/events. You can also check out the special event that we're going to begin teaching next Monday, our L2 prep course. Of course, there is a special discount for Option Insider listeners. Use OI2011 and receive $100 off. And, of course, I'm going to be spending the rest of my week at Mark Longo's house, rubbing his feet and feeding him chicken soup. So that's going to be
you got to do what you got to do to keep the show rolling.
It's the show must go on, even if that means sucking down some bouillon cubes and some delicious chicken pasta. So.
And Rob, what are you
I don't know what that meant.
And Rob, what are you guys working on over at Options Express these days? Aside from the Extend, when can we see the Extend stuff go live? What's the date for that?
I don't have the exact date. I mean, be pretty whenever we have these upgrades, because Extend is really stable as is right now. We want to make sure that every bug is squashed before we release that out to the public. We are continuing to add more and more accounts to the new all-in-one trade ticket, where you don't have to choose the right tab or click on anything special as far as whether it's an option trade or a stock trade, you can do everything on one order form. And we're unveiling that to a new batch of customers very shortly. That's been an incremental release. And as far as our education, tonight we actually have a new customer orientation webinar, which is always nice because you can, if you're new to the website and you're intimidated by all these tabs and these links and the kind of information overload, it's nice to be able to ask a few questions and kind of get steered to in the right direction. Also, as far as our live events go, we have just a couple weeks away from our Dallas workshop, which tends to be along with some of the California workshops, tends to have a really good turnout. And that's actually on the 5th of February. So that is right around Super Bowl weekend, and hopefully the Bears will be playing there.
Bears.
That's what we're gonna have. That's what we have going on right now.
All right, and that's going to do it for this episode of the Option Block. I want to thank all of you for listening and streaming and downloading this show and making it such a success. And we'll see you again next time on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved.